Sales promotions. Enticing a consumer to take the final step and make a purchase constitutes a primary goal for the consumer promotions. Advertising often creates the interest and excitement that brings consumers to the store. Promotions can then be used to encourage the actual purchase. There are several major forms of consumer promotions. One of them is coupons. Premiums are another type. Some marketing experts believe that the overuse of coupons can damage a brand's image, but premiums can enhance a brand's image. So premiums are prizes, gifts, or other special offers that consumers receive when purchasing a product. Another type of consumer promotion are contests and sweepstakes. So contests require some type of activity or skill. They can require purchase to enter, at least in most states, whereas sweepstakes rely on random chance. Refunds and rebates. These are oftentimes used interchangeably, but they do have different meanings. So refunds are for soft goods and rebates are for hard goods. So for example, a cash return on hard goods such as an appliance or an electronic would be a rebate. Sampling involves delivering a free good or service with the hope the person or business will like the brand and purchase it in the future. Bonus packs are used for a variety of reasons. Bonus packs are used to increase the usage of the product. So if consumers have extra potato chips, they're likely to eat more. They can also be used to match or preempt the competition in which consumers can stockpile the item. So an offer by a competitor is no longer attractive. A price off is a temporary price that is marked on the package of the product. Price off promotions are the best and quickest method to stimulate sales. So with the lower price, a price off promotion can encourage brand switching and hopefully product stockpiling. At times, companies can combine two or more consumer promotions into a single campaign called an overlay. So it may involve a promotion for a sweepstake or a contest with a coupon attached to encourage purchasing the product. A common overlay involves passing out coupons at the same time consumers are given a sample of the product. So an example of an overlay would be Hershey has both a coupon and an entry form for a sweepstakes in an advertisement. Tie-ins are when two or more companies or products are promoted within a single campaign. An intercompany tie-in involves products within one company. Intercompany tie-ins involve two or more companies working together. So for example, Tyson and General Foods develop a joint consumer promotion. Consumers can be divided into 4 groups based on their propensity to use promotions. Consumers tend to fall in one of the 4 groups, but it will also vary by product. Someone who is brand loyal for ketchup may be price sensitive for coffee. Promotion-prone consumers, they regularly respond to various consumer promotions and like to purchase products when they're on a deal. So for example, Brittany likes to use coupons and tends to purchase the brand of food that has the best coupon offer. Brand loyal consumers purchase only one particular brand of a product and will not substitute a competing brand regardless of the type of promotion being offered. Brand preference consumers have a small set of brands for which they have a strong preference. Promotions for one of these select brands will impact which brand they will purchase. And then price-sensitive consumers purchase whichever brand has the lowest price and use promotions that reduce the price. In planning consumer promotions, firms must always support the brand image and position strategy and choose promotions that reinforce the image and position that is desired. It's also important to consider the target audience and the types of promotions they are most receptive to. In terms of types of consumers, promotion-prone consumers respond to deals and will switch to a brand being offered on deal. That means a competitor can offer a deal and the promotion-prone consumer will immediately switch. Price-sensitive consumers don't care about the brand name. They just want the cheapest product. So while promotions will boost sales from these two groups, neither group is loyal. And as a result, they're not attractive in the long run. Brand loyal consumers will stay with a brand and don't need a promotion to make a purchase. So for example, some consumers are very loyal to the Heinz brand of ketchup. They don't need a coupon, they don't need a promotion. They are going to buy that particular brand no matter what, no matter the cost, and no matter what incentive their competitors are offering. The best group to pursue is brand preference consumers. They have a small set of brands they prefer, and deals for one of those brands can modify their purchase behavior. They can also be encouraged to become more brand loyal. While consumers tend to be in one of the four groups, it also varies across product categories. But of the four groups, the brand preference consumers are the best ones to target. Trade promotions are incentives that are given to channel members to push products through the channel. For manufacturers, trade promotions account for about 70% of the marketing budget. It's the second largest expense after the cost of goods sold. Trade promotions can be classified into four groups: trade allowances, trade incentives, trade contests, and trade shows. Consumers never see trade promotions, and most have never heard of them, but they have a huge impact on what brands are placed on retail shelves. The largest category of trade promotions is trade allowances, which are financial incentives directed to a channel member to stock a particular brand or product. So these financial incentives are there to motivate the channel member to make a purchase. Because off-invoice allowances are used so much, retailers are reluctant to make purchases without that type of deal offered, which is why it's so difficult for new brands to emerge into the retail market and vie for that shelf space. The most controversial form of trade allowances is the slotting fee, which is a fee charged by retailers, so say giant grocery stores, to stock new products. Retailers have four reasons for charging these slotting fees. The first is it costs money to add new products to inventory. The second, it requires shelf space, which means other products have to be taken off or are given less space. Third, it simplifies the decision process since manufacturers will not introduce new products unless they're sure it will sell. And fourth, it adds to the bottom line. Manufacturers argue that these types of fees are a form of extortion, and it diverts money that they could spend on advertising and marketing, and they're detrimental to small manufacturers who can't afford the fees. A small number of retailers will charge what is known as an exit fee instead. This is a payment of monies to remove an item if it does not sell and it has to be removed from the inventory. A major problem with trade allowances is that retailers do not always pass along the savings to customers. It's really only occurring about 52% of the time. Retailers like one brand to be on deal all the time so that the price-sensitive consumers will always have one brand to purchase. Trade allowances permit retailers to schedule promotions and promote deals to their customers. Another problem is forward buying, which involves retailers purchasing additional merchandise when it is on deal to sell later when it's off deal. This allows them to earn extra money. The disadvantage is the carrying cost of the extra inventory and having to store it. Another problem is diversion, which is buying a product on deal in one part of the country and shipping it to another part of the country where it's off deal. This doesn't occur nearly as often as forward buying because of the cost of shipping. For industries that use salespeople, such as the alcohol industry, trade contests can be used to spur sales. Funds used in trade contests are known as spiff money. Rewards for winning can be cash, but prizes seem to work better. Trade contests can be designed for various channels or for various companies within one channel. So while it can be an incentive for salespeople to push a brand, some organizations do not allow trade contests because they see it as a conflict of interests. Salespeople may not do what is in the best interest for the customers or the company if an organization were to allow for that type of contest. For trade incentives, the channel member must perform some type of marketing function to receive the funds. Most trade incentives are with retailers. The three types are cooperative merchandise agreements, premium or bonus packs, and cooperative advertising programs. A cooperative merchandising agreement is a formal agreement between a manufacturer and a channel member that specifies the marketing function the channel member will perform in exchange for the financial incentive. Another trade incentive is the premium or bonus pack, which is free additional merchandise with an order. So, for example, for every 100 cases ordered, another 5 are given free. The most used and well-known trade incentive is cooperative advertising. So here, the manufacturers pay a part of the cost of the retail advertisements in exchange for promoting the manufacturer's brand. So oftentimes I will see billboards, and it will be for, let's say, giant grocery stores, and it will have a picture of Foxy Lettuce. So in this case, Foxy Lettuce is picking up 50 to 80% of the costs of that billboard. Trade shows are used extensively in business-to-business marketing programs. It allows sellers to display merchandise and to seek prospects. It allows buyers to compare merchandise from various manufacturers and to see vendors for their stores. Few deals are ever finalized at trade shows because it's more of an opportunity to meet, look, and learn. International attendees, however, want to make deals, so American companies must be aware of this difference. Sales promotions can be a challenge internationally. Legal restrictions and culture can impact which promotions can be used and what should be used. Emphasis will vary, so each promotion has to be adapted to what is best in that country.